Hello, traders. It's E from MarketWizards.com, reminding traders to use risk capital you can afford to lose. All right, let's take a look at our price ladder. Reminder, last week's video talked about the possibility of going up and doing a double top test. And this is the ladder that has not changed since then, but obviously the location of the price has obviously swung through some of the pivots in between. So we've morphed from the highs back down through the middle towards the lower end. And all we need is 16 days of trading to create the ladder. So our resistance is back here. And before that, obviously here at the 11 and then the 72s. And this week we'd gotten fairly close to that. And I was on the mic at one point talking to some traders, and I said, we're really very close. Let's just use 68 to 72 as our resistance, and you got to be paid 62 to 65 area because the boys love 666, as some of us who have been around know. I was there for the 666 low way back when, and so nothing's changed. Motions of traders are still there. So currently we've got this 60, 15 and a half as our next support pivot, and we need to see what happens above and below. And we'll watch obviously overnight to see what prints and see if we can come up with some ideas from the overnight range. I had talked last week about these targets. We had to take out the 47, which was at previous week's high, and then the 52, which was one of our system pivots, and then obviously the 62 test was the double top, and then this is another one of our pivots that we just talked about. And I can say this, I actually thought we would take out the 62s. Did not know for sure about 72, but did not think we were ready to go test that all-time high on this contract at 81 and a quarter. So for now, that's still our resistance. And I'd said at the time when I'd posted this to a few traders, and that this should be our next support. And I even talked about that in the last video, that this could be retested or even the 88s. So it turns out we did come back and test all of those. This was a setup that I had looked at prior to the RTH opening. And in looking at this, I felt the first resistance had to be that 42 to 48 area, the previous week's high. And that was noted here. I post these on my charts so I have an idea in my mind. I don't have to go looking for them. What was last week's high? I just know it's right there for me. And so this is the way it started, with the idea in my mind that you've got to break the 32s before anything good happens for the short side. So it's still at the open on Friday. It was still unclear that we were going to have that type of day. You've got to bust this 102s to then open the door south side. And before that, all of these other levels. So it did that in a hurry, obviously, but you still have to respect this until that gets broken. And once that does, then the door, it's like a doorway opening to levels below in an elevator. And the bull climbs the stairs and the bear jumps out the window. We know we stalled. We came back down. We had one little bounce. This was at 88. I said, you got to make sure you're paid in there. We come back. We bounce. We cannot really get up above that 102. I think we got 105 was the high. Just came up a little bit, ran into trouble, and then it just knifed down. And this part here, as we'll see, is the part that probably a lot of traders did not expect, especially the timing of it at lunch, where we got such a big swing. But you can see this is clearly a pattern that it's an elevator down, and you can see that we never break the green, the red, or the blue. And this is the setup, but we'll talk about the umbrella trade. And this is picture perfect. Can't do better than that. And the only way to understand this pattern is to see it enough times. So here's our weekly look. We ran out of steam. We broke that 102s. We came back. First target that I thought would be a test would come into that 78 area. And I felt if we got to the 78 to 84 area, that would be a very important test below 93.75. And you can see why, because this would have been a double in here. Holds a little bit, can't sustain any upward movement, comes back right through it, and then it's lights out coming down, and all of these become targets for me. 65, and if we're still going, 53 and a half. And then obviously we started looking into that 40 to 32 area, and be careful as we approach this 30 to the prior low down here, 14. This was an 18 low. So I felt you'd be done by 25, just as a matter of principle. And here was where my 22 came in. I said, I think 22 is our next support. This is on a monthly look. And we can see just how step by step. So if we look at this schematic, we can see that we have come back to a 60% pullback. Okay, here's your 40%, here's your 50, here's your 60% pullback. Okay, and so here's where we are. So this is the next battle. 93 support down here in this box, and then up here the next resistance of 51, and middle pivot has got to be the 22 based on this area right here. And here's our price ladder. We went through 6 boxes. That's a lot. Typically, you don't expect to get more than 5. Okay, and this is a 6-box move. And if we had ended back here at 35 to 40 area, then it would have been closer to what you'd expect as a maximum. But this was certainly an outlier, and we came straight down. Now, if you look at the yearly levels, we can see that we've come back 40%, right? We're 1, 2, 3. So it's a 40 back. Here's your 50 back over here in the middle, and here's your 60 back. So this is known support for now until it breaks. This is not an umbrella trade here because we have all of these moving averages, the faster ones, above the rain line. Okay, and that rain line is typically our longer term pivot line. So for now, this is not an umbrella trade in the larger sequence. It just is in the smaller sequence. And this is just classic. You can see once we break down and start heading down, and this is at the end of your first hour, and then we get a push into the lunch, but we can never take this out. And I believe this is my 3-minute chart. We can never, 3 and a 2 were working great. And we can never take out that blue slope line, and then we cascade down again through it. And anybody who was hoping to just close their eyes and buy, and oh, we've gone too far, you just have to get out. You can't let this run against you. Then we got another little blip up here at the 130 time. These are profit taking bounces, but they stall. They never go anyplace. And a lot of this, some of this in here, I'm taking my walk. I'm out. I'm not here all day long. Okay, I take a little lunch, take a little walk, but you come back in, and first thing you do is try to read it. And I'd say, okay, if we take out this 50, we're heading down. We're going to go down there. We're going to test the 32s, probably, maybe even 22s. And I said, let's use 53.75 idea, 54 and a half pivot. And I said anywhere 52 to 54, give it a shot. You probably only have a few points of risk anyways. And let's just go with the trend. And that's the hard part in trading, is to understand you can choose your level of risk. Just because you think you've gone too far doesn't mean that the move is over. So I felt we had one more sell, and then at the end of the day, I figured we'd get one more bounce as all the shorts, day traders took profits, and then probably would get one more leg down if you want to play really late, which I did not. We had a good day, so why would you push it here when it's pretty choppy? Anyways, this chart is my favorite chart in a bear type market, in a corrective move, because it's so easy to read. Hard to trade, but easy to read. And you just know you got to take the heat. You try to get into it, not take too much heat. And then, once the rhythm starts to come back down, you just keep cascading down to lower lows. So it's not as easy as it seems in hindsight, because you are going to get runs against you. It could be 30 points, 40 points, whatever, but you're still trying to read the pattern of the previous high and, okay, where's my risk? How many points do I need to risk to take that trade? This is the NQ, same pattern. So we had really good synchronicity in the market. And I just love this pattern. You cannot beat the way this thing looks. NQs for those who are looking at that pattern. And again, the blue line is a slope line. Here's a look at by time, morning trade, lunch trade, afternoon trade, and then obviously the 4 to 5 o'clock trade. And you can see this is abnormal. We don't normally get this type of a range at lunch, certainly. And this probably surprised a lot of traders. But don't forget, it was OpEx. So you have to protect yourself in the market. You can't just let the market run against you and just keep throwing contracts at it, trying to bail yourself out. It does not work. And days like this will wipe you out if you don't understand that they will come along, probably, I don't know, once a month anyways. You'll get this type of a day, either up or down. Blue line is a slope line. Under that, you are going south side. This is an envelope from here to here. And we try to see, this is obviously very flat, no commitment, but then we break down and we get under all of these, and the rain line is up here, and these are sigmas in here as well. But this envelope contains it very nicely, and it just like a Keltner, it hugs it on the way down. And then we finally, towards the end of the day, we get this sideways chop and traders taking profits. And I call it a toboggan run. I mean, you can see it. It's downhill and then it levels off. All right, wrapping it up. We really don't need to know the why that a move happens. A lot of traders will sit there and speculate why. That's immaterial to me. I don't know. All I know is the big boys move the market, and that's why I follow all of those charts that I just showed you. I learned from a great trader, Kevin Haggerty, who used to work with Fidelity. It's not the lines that are important, but it's the motions of the traders behind the lines that are important. And all we know is once we get a stampede and a panic and a no bid, we're going to see this when we get a serious bear market again. And this is a pattern you want to really understand and learn and see how it works. And understand that it's tricky, but the amount of time in the market is negligible compared to what you can put in your pocket, just because it's not that slow, methodical pace that the long side usually takes. And in 1 or 2 days, you can make your whole month. So learn the pattern. Hopefully, some of you are catching on that none of us have a crystal ball, but some of us have been around enough to perhaps have some ideas that are useful. Hopefully, you can take something away from this and add it to your arsenal. And again, this is just not trade advice, just one man's opinion, and I hope it helps you. All right, feel free to pass it along to other people you know who might benefit from it. Have yourself a great weekend. We'll see you out there on X. Eve for MarketWizards.com, signing off.